name's Alan Carter. I'm the founder and CEO of Cabral Gold. We have an advanced gold project in northern Brazil called Cuiú Cuiú. Currently, we have inferred and indicated resource of about 1.2 million ounces, and the project is actually an entire district. So we've been getting some excellent drill results. We also have a recently completed pre-feasibility study out on a starter operation, and hoping to make a construction decision in the next couple of months.
I could see. So, the reason we're speaking today is I saw you, but I at the same time missed you in Beaver Creek in the US last week. What a great conference! Seemingly lots of interest in gold and lots of money, new types of money around. How did you enjoy yourself?
It was very busy, Matt. I mean, it's sort of like very full days, starting at 7 and ending at sort of 9, 10. At night. So we had a completely packed schedule. I think our schedule was completely booked out 6 to 8 weeks prior to the conference. So, as a friend of mine said to me, it's nice to have the wind at our back instead of our face for a change. Obviously the gold price, what I'm referring to is just the general sentiment and the fact that, gold keeps hitting all-time high. So it was an excellent conference, as you say.
No, it's fantastic. And obviously you're at that, I guess, final phases. You've got making a kind of final investment decision before the end of the year. Were you having conversations with funders?
Yep, several of those. I mean, obviously the project financing here, we're looking for about, the capex on our starter operation is just less than 40 million US. We're looking for a bit more than that because it's a 12-month build. So those discussions are progressing very, very well. So, very busy.
Okay. I imagine if you're in the middle of a conversation, you can't say too much, but have you got a sense of the kind of the mix of the money and the structure of the money in terms of that financing stack for the next 12 months or so?
Well, we'll principally be financing this construction or this build principally through debt. There may be a component of equity related to that. We got several possible routes we can go, but we're getting close, Matt. So I think our shareholders should expect to see some news regarding the financing, construction, having hopefully, fingers crossed, construction financing in place in the next few weeks.
Right, and obviously, gold pricing a lot for companies like yourself. Funders debt funders getting very, very comfortable in terms of margins, etc. But how much is obviously you did that OTCQB listing earlier in the year? I mean, has that helped in terms of these conversations?
Yes, it's definitely helped in terms of our trading volumes. There's obviously a very large appetite from retail investors, not just retail, but also institutionally. A lot of generalist funds obviously now moving into the gold space, and they're moving down the food chain, so to speak. I.e., what I mean by that is they're moving from large cap companies, the larger producers like Newmont and Barricks of this world, through the mid tier producers to the smaller market cap companies like us. And I think the thing that we offer as Cabral, we've got a pretty large resource in the ground already. We control an entire district, so we've got several gold deposits. We've got 4 new discoveries, and we've got about 50 other targets within our district where we've got some very good gold values in trenches and drill holes. But we've also got, we're getting very close to making a decision on building the initial starter operation. And to your point about the margins that some of these operations are currently generating, I mean, our all-in sustaining cost on a per ounce basis is currently at $1,200 an ounce. So, with gold at these kind of levels, 3,700. What that means is, pre-tax, you're making $2,500 US profit per ounce produced. So I think the payback at the current gold price on our starter operation is about 5 months on that capital cost that I just mentioned.
Right. Okay. So, and I think the other thing to remind myself was the PFS outlines a sort of 12-month build time frame. You're going to need to put the team together. And I know last time out we talked about Vinicius joining, etc. How's that kind of team build out going, and what have you charged them with doing?
No, it's going really well. Yeah, we added Vinicius Dominguez to the board. Vinicius is the head of regulatory affairs for Vale, Brazil's largest mining company, one of the world's largest companies. So this is the guy that handles all the permitting for Vale. But Vinicius won't be doing the build because he's got a day job with Vale. We've got a guy called Luis Solaro that we've hired full-time. Luis is a mining engineer. He's built several of these operations in Brazil. He is Brazilian. And so we are building a team out under Luis. So, we are hiring, and we are currently, building that team out. The build will be in part managed by our in-house group, but we're also doing it in conjunction with the engineering firm that completed the PFS study, which is one of the world's largest engineering firms. It's called Orsenco. They've got a very large office in Brazil, so we're working with them to prepare everything and just complete the last aspects of the detail engineering prior to making a construction decision. The construction decision itself, obviously, will only happen once we've secured the project financing, but that's well advanced, Matt.
At what point do you start sort of locking in prices?
Prices for equipment, you mean?
For the build, because obviously, the people need to understand there's still an inflationary environment out there, and once you've made the FID, you need to nail that down, right?
Yeah, we've already ordered a bunch of long lead items, so that in effect the build has already started. I mean, we've already hired we've already paid the deposit on the processing plant. That is under construction in Australia. It will be commissioned in Western Australia, and then it will be containerized and it will be shipped to site. So, there's a series of payments on that. We're already doing a lot of work on infrastructure, putting new bridges in, improving the road, clearing the site. There's a lot going on. So, it's getting pretty exciting.
Right, and sort of operationally, I think again, just kind of maybe going back on our last conversation, just trying to understand that kind of risk management. We talked about gold recoveries and the strip ratio dropping and sort of managing the variability in the oxide mineralization, etc. Are you doing much additional work on that kind of risk mitigation component, or are you kind of there?
Yeah, look, the whole examining all the risks on this is a massive undertaking. I mean, there are very few risks that are sort of like high on the priority list, but there's a whole series that are being addressed through a whole series of initiatives that we're doing. As I said to you last time, Matt, with heap leach projects, it's a very common process. It's very cheap. That approach to recovering gold is being done in hundreds of operations around the world, including most of the gold mines in Nevada, for example, some very large heap leach projects. We're going to do exactly the same thing. We're not doing anything different. The one thing I would say about our approach with the heaps is going to be, we're going to use on-off pads as opposed to permanent pads. Well, what does that mean? Most heap leach operations around the world, they start building a pad and then they keep stacking various layers of ore on top, which is fine. You only have one pad. But the thing is, if there's any issues with the porosity or permeability of that heap, you have a problem. So we are not going to take those risks. Our material is very soft, so it's not crushed rock, it's crushed weathered material. It's basically mud. So we can't stack it, 20, 30, 40 meters high anyway, but we are employing on-off pads. So we put the material on the pad, we stack each pad. We spend 30 days stacking each pad, 60 days leaching each pad, and then 30 days removing that material, and then we start again. That is more expensive, but what it means is if you have any issues with the porosity or permeability of the heap, then you can adjust things for the next heap, because each one of these heaps, we'll have 4 heaps rotating, and there's a 120-day cycle for each heap. So that the risk of any issues on that respect is mitigated by the fact that we can change things with the next heap that comes along.
Right. Okay. So understood. In terms of the other kind of growth component, so there's meant to be a quick call with you, but I think while you're on the phone, is to sort of understand that kind of exploration growth pipeline again, which we talked about last time in terms of how you, I guess, aggressively get after this exploration. You were starting to hit some pretty high grade systems there.
Yeah, this is really important. I'm glad you raised this. So, look, we are aggressively exploring in parallel with the development work that we're doing on the starter operation. So we've got 3 rigs currently turning. They are the objective of those 3 rigs is to add ounces to the global resource, where we'd like to be in about 12 to 18 months' time. We'd like to double the current resources that we've got. As I said, we've got 4 new discoveries. So we're aiming to have maiden resources on those in the next 12 months or so. And we're also going to do some additional drilling on the existing deposits where most of that 1.2 million ounces is already is. So that is a very key objective for us. most companies, once they start building an operation, the share price dips because people assume that there's going to be no news during the build. That's not going to be the case for us. We're going to continue to drill, keep knocking out drill results on a regular basis. So it's been a bit of a slow startup with the drilling. There have been some other priorities, as I said, with the development work that's going on. But I think now that the exploration team's really starting to hit its stride, I think you'll see some new additions to the team in the next few weeks, and a ramp up of the results, and a lot of news coming out on the exploration drilling over the next few weeks and months.
Right. So then, and let's be just clear, in terms of that drilling and the 3 drills going, this isn't greenfield. This is up at Machiche Northeast, Jerimum and PDM, right?
Yeah, that's right. These 4 areas that we found. I mean, that Machiche Northeast zone you mentioned, as you know, we had some stellar drill results there in the last sort of 12 to 18 months, including 11 meters at 33 grams. The step out hole map was another 12 meters at 27 grams. I mean, these are stellar results. And so we want to find out how big that high grade zone at Machiche Northeast is. The geophysical feature extends about 700 meters along strike. So if the grades go with it, then that could be a very large high grade gold resource. But quite apart from that, these other discoveries that we've made are pretty exciting, particularly this Jerimoon Seamer area, where I think the best hole we've drilled into that so far is 39 meters at 5.1 grams. And now we're starting to map out a much larger zone. Clearly extends at least 500 meters along strike, and it's quite wide too. So I think our investors and our shareholders should expect a constant flow of drill results now through to the end of the year and well beyond that, and also during the build. We're going to keep drilling during the construction of the starter operation.
It's kind of interesting, actually. So having sort of been in the States for the last 2 weeks, talking to various companies, Brazil's had a good hearing. We spoke with obviously your neighbours just 5 kilometers up the road, G Mining Ventures, and their big project up there.
Yeah. We're right next door to them, so our claims are contiguous with theirs. We're just to the northeast, as you know. I was involved with the discovery of that deposit, so it's really gratifying for me as an exploration geologist, at least originally, to see that project come to fruition, and it's now, as you know, Brazil's 3rd largest gold mine. So that's now knocking out 200,000 ounces a year. The Cuiú Cuiú area has a much larger footprint in terms of the amount of gold that was mined by the small miners 40 years ago from the streams. There was 10 times the amount of gold come out of Cuiú Cuiú. And the soil anomaly that we got at Cuiú Cuiú is also way larger than the soil anomaly at Tocantinzinho. So we think that, and the fact that we've got many targets and numerous new discoveries here, all goes very well for the future potential of our project.
Well, I'm sure it's just to use your phrase of the wind's at your back. It's not all plain sailing, but it's now time to kind of move this project forward. Let's stay in touch. Obviously, the next few weeks and months are going to be critical in terms of that kind of fundraising, build the team up, and that FID. But so far, I like the cut of your jib.
Yeah, thanks, Matt. No, we're very happy. I think for once we may have our timing right. There are lots of obviously catalysts for the gold price, and it continues to move higher. But as I said, we've got a lot of key catalysts coming up in the next few weeks and months as well. So the timing looks good.